Let's take a look at Monero for this week's article on Brave New Coin. So there are many privacy coins, and what that means is when I send a transaction, no one else can view the ledger. So for things like Bitcoin, for example, some people argue that Satoshi made a mistake by allowing a public ledger to be freely available so that anyone can view and track the transactions. We have companies such as Chain Analysis right now who use this to sell their services to governments around the world, so you're being tracked constantly, especially if you're using an exchange and you're moving coins around. So the privacy people, the Monero maximalist people, say that eventually we're going to need this privacy technology and we should be using it already. And personally, I agree with them. I don't want my bank account transactions in general broadcast to the world. I don't think anybody does. There's really no need for that. So that's the main issue that Monero hopes to solve, and it does that with a variety of highly technical privacy capabilities. Now, if we compare that to other chains, things like Dash, Zeek, the Cred, Pivx, these are optional privacy features that you can send basically your transaction through a mixer or tumbler that brings everything together and then spits out your transaction on the other end, but doesn't reveal the stuff in between or who sent it. Now, Monero just does that by default. So again, the Monero maximalists say all this other stuff doesn't make any sense. If it's optional, no one's going to use it, or it's going to be hard to use, or it's too hard to use. Grin is also default privacy. The other issue with default versus optional privacy is that optional privacy is typically disabled by the exchange. So things like Zeek, Dash, Decred, Pivx, you can't, to my knowledge, send a transaction from the exchange to another address using those privacy settings. This has to do with KYC AML stuff, being able to unable to track things, etc., etc. So just looking at all these metrics, comparing everything, XMR leads in market cap and nothing else. You can't see the daily transaction volume because it obscures those values. You can't see the addresses because it obscures those values. So it could be leading in these metrics as well. We don't know. We'll never know. That's the point of the chain. It's got pretty high fees, which tells me, pretty high transactions per day. So they did improve scaling with protocol changes, and it may need continued improvement, or the fees are exactly where they should be to make sure the network is secure. That's sort of a chain by chain basis thing. Now, Dash leads in fees, transactions, and active addresses, I think because you can see the tumbling, the mixing basically. So when it sees transactions and active addresses on the chain, it's including all of the coin mixing and washing, which is fine. But you just have to know that if you're looking at charts like this, or if you're looking at metrics, you're like, oh, this Dash coin, it has way higher numbers than these other tokens. It must be better. Sort of. It's kind of like apples and a paperclip. You can't really compare the two, they're just different. Looking at Monero's difficulty and hash rate, so it's a proof of work coin. Now, they've tried extremely aggressively to remove ASICs from the chain. So ASICs are just specialized hardware that can mine a specific algorithm. So you can see hash rate ballooned, they changed the protocol, hash rate chilled out for a while, it ballooned again, they changed the protocol, and they finally said last year, why don't we just change the algorithm? That's what I mean when I say protocol. So they changed the algorithm a little bit slightly here, they changed it a little bit slightly here, and then they changed the algorithm completely, which means it's extremely hard to create ASICs now because this algorithm makes CPU mining advantageous over ASIC mining. So there's ASIC mining, GPU mining, CPU mining, and this brings it back to one computer, one vote sort of thing versus a mining farm having all this ability to affect protocol changes. And speaking of comparing apples to paperclips, you can't look at this hash rate and compare it to anything else previous because a random X algorithm hash rate is different than a crypto night hash rate. So initially when I saw this again, I was like, oh, hash rate's exploding. Look at that. It's not exactly the same. It's kind of like comparing script and SHA-256. Like, it's different algorithm. One of the most concerning things about the network for me is the hash rate concentration. Currently 63% is controlled by 2 pools. I think if this were any other coin, there would be outcries from the public to switch it up here to maintain centralization. I mean, if they want to change up the algorithm to push off ASICs in a bid to decrease centralization, and then change the algorithm and only get 2 pools with 63% of the network, which in effect increases centralization, it's just, they're just recreating the same problem. So hopefully this will even out over time. There'll be more pools, or people will move their hash rate to other pools or something. But right now it doesn't look great from a centralization point of view. If we look at transactions per day on the chain, which is this line here, and then I put the network difficulty as the fill in the background, which is kind of a proxy for bot mining or botnet mining, ransomware mining, that sort of thing. Basically where your computer is taken over to mine the network without you knowing it. They've had issues with this on Monero because the privacy is so good. You don't know where things are being sent after your computer's been hijacked and mined the network. It's very hard to track down who's doing what behind the scenes. It's kind of the perfect crime. They steal your electricity, they steal your CPU power, GPU power, whatever, and get paid for it. So all this stuff had been propagating in the background. I think that's part of this. You know, they had ASICs, they had malware, they had all sorts of stuff pushing this hash rate higher, as well as transactions. So now they have transactions increasing slowly since this random X change. It'll be interesting to see from the malware side, if because the network is CPU mined now, that it's better for these malware botnets. We'll see. Time will tell. But transactions are definitely up from October, which is bullish for any chain. Not above all-time high, but definitely near historic highs for sure. For sure. Certainly above October 2017, April 2018, you know, these levels. I think we'll need a few more months, even a year, to see this normalization after the algorithm change. All right, let's talk technicals. My favorite stuff that I look at every day. I have on every screen I can. Use it all the time. That's why I talk about it. I look at Bitfinex open interest, long, short, green and red here. I look at the volume profile of the visible range, so where the buys and sells occurred. I look at an oscillator called RSI, mainly for extremes or divergences. So for instance, if we get a higher high in price, I'm looking for a lower high in RSI if I'm concerned about a pullback. Wasn't the case here. Isn't always the case. It does give strong evidence or stronger evidence for a mean reversion type play if you see weakening momentum. So similar to here, we had a lower low, much lower low, much higher RSI, which pointed to a bounce, basically a mean reversion. So looking at the 50 and the 200, it had its golden cross a few days ago. This should all be bullish. It's above the 200. It's retesting the 200. It is currently being smashed down by the 92, something like that. There's a massive $100 psychological resistance, and then there's a historic support resistance zone around 92. So I think it's going to need a lot of time between 100 and 125, 90 and 125 to normalize those levels again. Let people who bought up here and were trapped get out at break even, you know, that sort of thing. So it needs to reconsolidate and then attempt more bullish momentum. Adding a pitchfork to this, similar to Ethereum, very similar trajectory based on the anchor points here. And you can see it hit the median line very nicely. So typically throughout any given trend of a pitchfork or a channel, you'll see it hit this median line. You'll see it bounce above or below the support and resistance. So it gets smacked down here, it gets supported here. Very minimal evidence that this is going to hold. Now, if it's like the 2015 BTC pitchfork, I can say with confidence and project certain areas that are going to support and certain areas that are going to have resistance. This right now needs more time to flesh itself out, but it's a good brainstorming draft, you know? It's something to just put there and say, okay, this is very possible that I'll just hold this. So 50 is the support, 175, 176, maximum high right now. And it's going to love this yellow line. It's going to keep wanting to come back to it over and over again. If it's above it, it's going to want to come back down. If it's below it, it's going to want to come back up. And these other diagonals typically also have some sort of support resistance quality to them. Looking at the cloud, we want it above the cloud, we want the green cloud, we want bullish TK cross here, which happened earlier this year. So all this looks bullish to me. The trouble with any trend metric is this extreme abrupt change. So this inverted V is going to create some issues for the cloud over the next couple of weeks as it figures out, is it bullish, is it bearish? Because it's going to reset these trend metrics again very quickly. So it's highly dependent on price here over the next 2 weeks. If we go sideways and into the cloud and then back up above the cloud, we're bullish, we're good to go. If we stay in the cloud, indeterminate, still need more price action to figure it out. And if we dip below the cloud, then we turn bearish again, probably revisit these lows. And that probably happens market wide. We might just Eiffel Tower, that's a pattern, where we just go right back to the previous low very quickly. Just as quickly as when we went up, we just go right back down. Similar type pattern here. Typically it happens much quicker than a year, but it's certainly possible if we drop below the cloud for an extended period of time. Lastly, looking at Monero, BTC, very similar to the USD chart. One thing I'll point out here is that first, the VPVR upside resistance is massive, probably the biggest for any chain I look at across the board. You can see it's definitely got pretty big support around this psychological level of 0.1. Resistance. Upside resistance around 0.1, upside resistance around 0.17, something like that. The important thing here trend-wise, though, is it hasn't been above the cloud or the 200 since early 2018. So this is definitely a shift in previous price action over the past 2 years. Definitely a reason to be more bullish than it has been over the past 2 years. It's above all these trend metrics. There was some questions in my mind seeing this pullback month over month over month, that there was some sort of hidden chain inflation going on that we didn't know about. They did have an issue with that on the exchange side, not necessarily on the chain side. One other big problem with default privacy is it's impossible to actually audit the chain. So you don't know if there's hidden inflation because no one knows, no one can audit the transactions essentially. So while it's very good for privacy and sending transactions and not being tracked and just avoiding government watchdogs or government scrutiny, on the other hand, you can't audit the chain, so you don't know if there's hidden money out there, hidden XMR being created. But overall, looks very bullish right now. More bullish than it has in the past 2 years. Again, it's above the cloud. It's got its bullish golden cross here this week. What I'd watch for is if this cloud is supported, if the 200 is supported over the next month, let's say, it may get some sort of cup and handle situation, which the chart pattern purists are going to argue with me. You can't have a cup and handle at the bottom of a trend, whatever. Here's a nice inverted cup and handle, and it went lower. So what we want is a cup and a V or a U here and break this high, local high. So anything above 0.09, we'll probably see some interesting stuff into 0.01.